Okay, so professors, I think we had to deal with the double entry principle, and to the best of my knowledge, I feel we have made some progress regarding the double entry and when to debit, when to credit. So, any professor to give us a summary of what we have discussed so um, far as the double entry principle is concerned. Who is going to do that for me? Yes, the silence. Now I've tested everybody's microphone, so all your microphones are working except one person who didn't respond. So let me see. Prof. Michael Boating, what have you picked so far regarding all that we've said about double entry? In fact, for those who are new, I think I shared the video some time ago, but yet still, if you are new. So, Michael, what do you have as far as the double entry principle is concerned?
So please, I learned about accounting equation.
Okay,
Then we said accounting equation is a straightforward equation. Serves as a foundation for accounting principles.
hmm.
So we
Okay,
have assets, liabilities, and capital.
hmm.
We said asset is equal to capital if the property of business were financed by owners of a business.
Okay,
Please.
okay. I think you have tried. Thank you very much. So, he was taking us to the accounting equation. Of course, that forms the basis for the double entry principle, right? Because then you need to know the elements of accounting before you can look at debiting and crediting. So thank you very much. So he spoke about the equation where the asset is equal to capital, meaning that the resources of the business were provided by only the owners. Okay, great. Thank you for that. Prof. Emmanuel Fifinati, what have you learned so far regarding the double entry principle?
Sir, please. I know double entry. The double entry principle states that every business transaction affects at least two accounts and must be recorded twice. One account is debited and the other is credited.
Okay, great. Yes, so Ima made that point. I think Ima, can you reiterate the point again? I lost the thought there.
Sir, please. I said the double entry principle states that every business transaction affects at least two accounts and must be recorded twice. One
Oh,
is
okay,
one account is debited and another account is credited.
okay. So yes, that is true. That based on the double entry principle, transactions are believed to have two effects. I prefer it when you put it that way, rather than saying affect two accounts. Because you remember I gave you a particular transaction where three accounts were involved. Okay, so it's the twofold effects we appreciate that every transaction has twofold effect. So the effect could happen could be in three or four accounts, sometimes even six. It depends on the nature of the transaction, right? But the effects are two. Okay, so look up as early as I hinted you about says one effect will lead to you making a debit entry and a corresponding credit entry for the other effect. Okay, so thank you for that thought. Let me pick a lady. I think two gentlemen have spoken. A lady, Prof. Stacy, would you do that for us? What you have gathered so far with regards to the double entry principle. Or maybe I can, Prof. Stacy, should I give you a lawyer, get you a lawyer or something? Uh-huh. Oh,
the question.
yes, so I was saying what you have gathered so far as in under the discussion of the double entry principle. As in what have you understood with regards to the double entry principle?
Okay. Yeah.
Okay, you know what? I think I'll allow you to gather your thoughts. Okay, she's ready. So go ahead.
Okay, so it states that every business transaction affects at least two accounts, and
Okay,
the total debit must always equal total credit.
okay. Thank you. So let me make a comment. So Ima, you said transactions affect two accounts. Now Stacy added at least. So I love it that when you are stating with regards to the number of accounts, add the hedging word at least, because like I hinted, it can affect 3 or 4 or even 6 accounts, right? Depending on the nature. So Stacy, thank you for bringing that hedging word at least. So you can say the principle says that a transaction affects at least two accounts, and that is very true. So don't just say two accounts. That makes it definite, but at least makes it more. Okay, so thank you, professors. I appreciate all that. The little I'll add is I made you appreciate that to be able to successfully apply this double entry principle, you need to understand the elements of accounting, okay, the types of accounts. I don't know if you remember that. So regards the elements of accounting, I gave you that we have assets, liability, capital, income, and expense. And I think we were able to establish that when assets and expenses increase, we debit. And when they decrease, we do what? We credit in that order. I also took you through the types of account, right? Where we have the personal and impersonal. And I want to believe you appreciate it. Now, to top it up, I told you that we had to go through at least 10 transactions. And we took the first transaction, right? Which was investment by the owner. Investment by the owner, or when the owner makes investment in the business or introduces capital. I would want professors to again tell me specific things we saw under that transaction. Anytime the owner makes investment, what did you hear when I was giving the explanations? Who would do this for us? Prof. Fidel, would you try for us? If the owner makes investment, what happens? What account do you open, and which account do you debit, which account do you credit? These are the specifics I need from you. Yes, Prof. Fidel. Prof. Dennis Hayfon. Prof. Dennis.
Hello, sir.
Yeah, Fidel.
Sir, please, can I get a question again?
So I was saying that with regards to the transaction of the owner making an investment, how do you apply the double entry principle? What two accounts do you prepare, or what account do you prepare, and which account do you debit, which account do you credit for investment by the owner? I'm sure his network is not too stable. Okay, sorry, I think my connection was a bit interrupted. So let's move on. So Fidel, I don't know if you got my question well. I was asking about your understanding with regards to the transaction where the owner makes an investment into the business. I don't know if Fidel is still available.
Sir,
Yes, great.
please can you hear me?
Yes, we can hear you.
Okay. So I think it be the personal account there. Hello.
Yes, go ahead. We are listening.
So I think it should be the personal account.
Okay. So what two accounts do you prepare? Okay, so I think because of the network, let me allow him. So, Prof. Fidel, thank you. So, yes, if you analyze the transaction, indeed, there is a personal account in there because the owner is a person, right? So you can do the analysis of personal account and how the double entry principle applies. And I believe we all appreciate that for personal account, you debit the receiver, you credit the giver. So here, if the owner is making an investment in a business, in essence, it means the owner is giving something to the business. So when you open the owner's account, you would have to credit the owner. But in business, the account we open to represent the owner is capital account. So you see, that is why we open capital and credit capital account for investment made by the owner. Okay. The other account will be the asset or the resource the owner is investing. So if the owner is investing cash, then we open cash account. If the owner's investment is in the bank account or came in the form of a check, we open the bank account. If the owner invested a vehicle or a building, then we'd open vehicle or building account. And here you see that the vehicle, the building, the cash will be an impersonal item because it's not a person, right? So if it is cash or bank or another vehicle, that is impersonal. But then if we look at it, it is impersonal, but it is real. And we said for real account, we debit incoming. So let me go there. So you see, we debit incoming items and then we credit what? Outgoing items. So if cash is coming into the business, then we have to debit it. If a vehicle is coming into the business, it's a real item. So we debit it. So you see that you can use the various techniques I've given you to do your analysis to know which account to debit and which account to credit. The more reason why it's important for you to know the double entry rules regarding the elements of account and then the types of account. And I want to believe we have exhausted all discussions on that. Okay. The second transaction we looked at was, I think, acquisition of an asset, right? When the business buys or acquires an asset, acquisition of an asset. So let me do it this way for you by way of revision. Anytime a business buys an asset or acquires an asset, if you analyze the transaction, you see that an asset, it could be a vehicle, it could be a land, it could be a machine. It's an impersonal item, but it is real. We can see land, we can see a vehicle, right? So what do we do? Since the business is getting that asset, it is incoming. So we are going to debit the asset. What happens to the other side? If you purchase with cash or check, we can use the analysis that cash and check or cash and bank, they are assets, right? And when assets increase, we debit. When they decrease, we do what? We credit. So in this case, if you are buying an asset and you are paying cash, professors, I believe you would agree with me that the cash will be going out of the business, or the cash as an asset will decrease. And when assets decrease, we credit them. So you would open your cash account or bank account and credit. However, if the business purchase, please listen carefully. If the business purchase the asset on credits, which means the business didn't pay. For example, Mr. Amo, I'm running a barbering shop, and I go to Melcom to buy there's a blade, right? Packets of blade, and I don't pay. In fact, packets of blade will not be an asset. So let me use maybe the chair, the swivel chair that you sit in. That's an asset, right? So if I buy that chair and I don't pay, that's on credits. So my business, my barbering shop will acknowledge the chair, which is an asset. It is coming into the business. So I'll open chair account and debit it. But the other side is I am owing Melcom. So that becomes a liability. Okay. So what happens to liabilities when they increase or decrease? When they increase, we credit them. When they decrease, we debit them. In this transaction, you have gone to buy, you didn't pay. So as a business or Mr. Amwes barbering shop, am I not going to be owing more because of that transaction? The answer is yes, because I'll then be owing Melcom because I went to buy that chair on credit. So a liability is increasing. So when I open that account for Melcom, I would credit it, okay, because Melcom is giving me a machine on credit, and I need to acknowledge that liability created. Okay. So all these are revisions, so just for my new professors to appreciate. We now move to the third transaction. We didn't look at that last week. So let's open our ears well and eyes well. One of you should do the reading for me. Who is going to do the reading? Is it Christabel or Jaden or Jorish? Or please, Kwame, can you add your surname? Kwame what? Is it Kwame Akufo-Addo or Kwame Mahama? So please add your surname to it. Maybe Kwame Nyankopon or something. Okay. So Kwame, since you are doing the naming, you can do the reading for us of Kwame. I think Prof. Kwame cannot. I don't know, two things. It's either he can hear me, but not willing to talk to us. And that again to go chop removal. Because the essence is for us to, have a meaningful communication. So if I ask something and you are not giving me feedback, it means you are not here. So I'll put you in the waiting room. Okay, so Prof. Kwame, let's hear you. Okay, so let me put Prof. Kwame in the waiting room. Okay. It looks like today I'm being wicked there. Professors. No, but technically, if you are in the class, I ask a question and you are not answering, then it means you are not here. So let me help you. Let me put you in the waiting. The first, somebody is doing wrong. Okay. So let's move on. This one is not my fault. So who is doing the reading? Ewenam, you have been laughing throughout. So read the note for us. Sale of goods or stock for cash, check, or on credit. Ewenam, we are listening.
Sales mean the sale of those goods to bracket stock in which the business normally deals and which were bought with the prime intention of resale. Sales must never be referred to as the disposal of assets that were purchased to be used to generate revenue for the business and not to be sold. Sales can be made for cash or check or on credit. In each case, the stock of the business, which is an asset, decreases. Hence, the sales account must be credited. If it was sold for cash or check, then another asset, into bracket cash or bank, increase and must be debited. But if it's on credit, then another asset can called a debitor is created. Hence the debitors account should be opened and debited.
Okay, thank you very much for that. Okay. So Ewen now reminds me when I was in SHS1, when I saw this word DEBT, I was confused. Seeing debitor, debtor, I was seeing a lot of things. The teacher said, hey, Mr. Amwa, calm down, it's data, right? Even though I'm not an English person. So that's how they say we should say it, data. I was saying it, debtor. Okay, so if you listen carefully to what he read, a business selling goods. Now, we need to first understand that what a business calls sales refers to the exchange of the items which the business was set up to do. So if a business was set up to sell shoes, then anytime the business exchange shoes for money, it is called sales. So if a business was set up to sell shoes and this business go and sells a fridge, that cannot be what sales. Because that fridge then would have been an asset because it was bought to be used in the business, not with the intention to sell to make money. So please know the meaning of sales in accounting, right? So the same way, if you are, let's say, an estate business, right? So estate business, those who deal with buying and selling of land or buildings, okay? If you go and buy a land, if you are not careful, you say that the person is buying a fixed asset, right? So you might not open, sorry, you might not open the sales account if the person was selling the land, okay, because you think it's an asset. Since the business is set up to buy and sell land, okay, anytime they sell land, it is recognized as what? Sales. The same way when they buy or purchase a land, it is recognized as purchases. I don't know if I'm making sense. Likewise, if somebody sets up a vehicle dealership, so the person buys and sells vehicle. If they buy the vehicle, then automatically it is purchases. If they sell the vehicle, automatically it is what? Sales. because that is the main model of the business. Unless you are given further information that this time the vehicle they bought was not for resale, but to be used for maybe running, errands for the business. So it was not meant to be resold. Okay. So it says sales here means the sale of goods or stock in which the business normally deals and which were bought with the prime intention for resale. Sale must never be referred to as disposal of what assets. So when you sell things that you are not normally dealing in, then we look at it. Is it an asset you are selling? Okay. Now, another thing I want you to take notice. Sales can be made on cash or check basis or on credit. What it means is that a business can sell goods and collect money or check. Or sometimes they will say, okay, you pay later. That's the credit sale transaction. In all of them, whether cash, bank, or credit, in all of them, we say the stock of the business will decrease because you are selling. So example, Omega Company Limited, we buy and sell books. Okay, so if we have 100 books, that's the stock of the goods, and we sell 20, let's say to kindergarten students, then our stock will decrease. So the asset, stock, or goods will decrease. So if we open account for that stock, an asset is decreasing, what will we do? We'll credit the account. But what account do we open to record that decrease in the goods? It is the sales account. It is the sales account. So anytime you sell goods, the first account, the primary account you open is what? Sales. That sales account records the decrease in the goods or the stock you have. If I have to take the point again, let me know so that I take it. So anytime a business sells goods, the first account we recognize is who? Sales. And that sales account is recording the decrease in the asset, stock, or goods. Okay. The other account depends on whether you collected cash. So if you collected cash, then cash is another asset. And here cash will be increasing. So you will debit what? Cash. So you see an example here. Sold goods to Kwame for 1,000 Ghana cedi cash. So the first account will be sales. The second account will be what? Cash. We are going to credit the sales account because there's a decrease in asset goods, and we'll debit cash because there's increase in asset what? Cash. So let me go down so you see the effect there. Right. So you see the asset stock or the goods decreases, and another asset cash what? Increases. So let me give you the summary so that you appreciate it better. So anytime you sell goods and you take cash, we say the goods or the stock asset decreases, and then the cash, which is another asset, increases. So in terms of the account, what two accounts you open? You open the sales account and the cash account. The cash is increasing and it's an asset, so you debit. And then sales, obviously we take the corresponding one, credit. But I hinted to you that this sales account is recording the decrease in the stock, and stock is an asset, or the goods you have is an asset. So if it's decreasing, okay, so you see, we go back to the principle. If an asset is decreasing, what do? We credit. That's why we are crediting the sales account. Please, any question? Any question? Any question? Any question? Kwame is back again. Kwame doesn't want to rename his full name. So Kwame, please, for the last time, edit your full name. I think Jaden, please add your surname to it. Okay, so Jaden and Kwame, please do that. This time I will remove you and you may not be able to come back. Okay. If I put you in the waiting room, that one you go and you come back. Okay, so let me allow you some time to do that. So Jaden and Kwame, please edit. So Kwame has edited and Jaden has edited. Nice, simple. Okay, thank you very much for that. So no questions. Okay, so we move to when you sell for check, right? So if you sold the goods for check, it's just the same as the car, just that the check would then go into your bank account because it's also money, just that it's in the bank account, right? So that one, again, the asset stock will decrease. So you open your sales account and credit it, and then you open your asset bank and debit it because bank will be increasing. You have sold goods and you are receiving money into your bank account, right? The last bit is when it's sold on credit. If you sell on credit, still your stock will decrease. So you open sales and credit it, right? But this time, you are getting another asset, which is a debtor, right? Because the person who bought the goods from you or the person you sold the goods to didn't pay. So you recognize that person as a debtor or the worker for sale of goods. And that debtor is an asset. In accounting, debtors are assets. So if you sold goods to somebody and the person didn't pay and becomes a debtor, okay, the balance on the debt will increase. So the asset debtor would increase. If you don't look at it from that way and you say that this person or the one you sold to is a person, so you ask yourself, was the person receiving or giving? In this case, if you are selling goods to Kwame on credit, Kwame is receiving. So Kwame will be what? Receiving, right? So you debit the receipt. So anytime you sell goods on credit, you open a debtor's account and you debit the debt. Okay. So I'm sure in school you saw a lot of these trans sold goods to Kwame on credit, sold goods to Araba, sold goods to KK, and you were supposed to record it. So that's the reason or the rationale behind it. Okay. Prof. Nicole, question, let's hear you.
Sir, please, can you go back to B?
I should go back to the
3B.
3B. Okay, 3B. Okay. So
Yes, sir,
sold,
this part.
yes, sold goods
This
to
part.
Kwame on credit.
Asset stock decreasing.
Yes.
Sir, down there.
Okay.
Asset decreases and another asset debtor Kwame increases.
Yes.
Sir, so the debtor is an asset.
Yes, a debtor is an asset, right? A current asset for that matter. We also call them receivables.
Okay.
Okay. Any other questions? But I hope you understand why we say the debtor increases, right? Or the debtor's balance increase.
Say yes.
Okay, thank you. Any other questions? Any other questions? Any other questions? Any other questions? Please ask questions so when you are confused, because the double entry principle is the yes. Okay, I think we are good.
Why can't you say the liability of Kwame increases?
The liability of Kwame increases. So you see, accounting is such that okay, there are always two sides of the event or the transaction. Let me see if I can do this for you. So you see, you are the accountant for the business, okay? So anything about Kwame, you are not bothered because Kwame would also be recording his business transactions. So you see, when you sell goods to Kwame, right, you, the accountant of the business, remember we are the accountant of the business, so we are recording for the business. So on the part of the business is acknowledging sales, right? And because Kwame didn't pay, we'll acknowledge Kwame as a debtor, okay? Now, if you are looking at it from the side of Kwame, Kwame would also open two accounts. So if you sell goods to Kwame, Kwame will see that as what? Purchases, because Kwame is purchasing from the business. So Kwame's books will be purchases account, right? And then Kwame would not see us as a debtor, but what? A creditor. Because we are supplying the goods to Kwame. So Kwame will see us as a creditor because a supplier that he owes. Okay. And creditors in Kwame's book will be a what? A liability. So you see the twist. From the side of the business is seeing sales and a debtor. But from the side of the person who is also receiving the goods from the business, he sees purchases and what? A creditor. Okay. But we are the accountant, we are always focused on the business. That's why we are not bothered about what Kwame is doing in his books. We are bothered about what the business is doing in the business books. Nico, does it make sense?
Yes, please.
So be very careful. Some students get confused because they look at the other person and they say, but Kwame is receiving the goods and he didn't pay, so Kwame's liability will go up. So why are we saying Kwame? Okay, so don't look at Kwame at all. We are looking at the business. So for the business, what has happened? The business has sold goods. So the business goods or stock has decreased. Okay, so we open sales account to record that decrease. And we do that by crediting. Because when an asset, stock, or goods decrease, when asset decrease, we credit. Okay. Now, the person didn't pay. So we have to acknowledge or recognize that that person is owing us. That person is a debtor to us, the business. That's why we are only interested in the sales and what? The debtor. Okay. So thank you for the question because I feel the questions, open the doors for more understanding. Okay. I really take my time with the double entry principle because it's really essential. You get to certain topics. If your double entry is shaking, you would suffer. And you say accounting is difficult. So thank you. So we are done with the sales transaction, right? We go to purchases, which is the opposite of what? Sales. So here the business is purchasing goods. Purchasing goods. And here purchases refer to the items you are buying with the mentality to go and sell. If you buy with the mentality to go and use it in your business, that is not purchases. That will be what? An asset. Okay. So in accounting, the term purchases refer to item. Oh, I think somebody should read it. I think Kwame is Gabriel Jan. Gabriel, please read it for us.
Purchases of goods and stock. In accounting, the term purchases refers to items that a company buys primarily with the goal of reselling them. Of course, there are times when the goods are modified, enhanced, or used to manufacture something else. But the crucial factor is resale. Resale. Sorry. For instance, computers are purchases to a company that deals in computers. If another item, such as vehicle, is purchased that the company does not intend to sell it. That the company does not intend it. it cannot be labeled purchases. The van is being purchased primarily for use, not for resale.
Okay.
Purchases can be made for cash or check or on credit. In each case, the stock of the business which increases, increases, hence the purchases, hence the purchases account must be debited. If it was purchased with cash or check, then another asset, which is like cash or bank, decreases and must be credited. If it is on credit, then a liability called a creditor is credited. Hence, the creditor's account should be opened as credit.
Okay. Thank you very much. And sorry for putting you in the waiting room. I didn't know it was you. I know Gabriel Jam, but I didn't know Kwame. So sorry about it. Okay. So if you look at what he read, it's still back to the point that you really need to know what is purchases, right? So if a business is buying something or purchasing something, you should identify whether the intention is for resale. If the intention is for resale, then you can capture it as what? Purchases, right? But if it is not for resale, you cannot capture it as purchases. You need to capture it as the item. So if the person bought vehicle not to sell but to use it in the business, you open vehicle account and no purchases. Okay, so that's the point he read there. Now, just like the opposite of the sales, the purchases will bring in more goods or stock. So this time the stock would what? Increase. So when stock is increasing, an asset is increasing. So you need to make a debit entry. This debit entry, we do it in the purchases account. Now, some people argue that why don't we open the stock account and debit the stock account? The rationale is if you open stock account, then both the sales, the purchases, the return invoice and return all will be in one account, making the whole thing very chaotic. That's why we open this unique account just to record the movement in stock. So you see that the sales is recording a decrease in stock because the stock are going out, you are selling them, they are going out. And then purchases would record what? An increase in stock, right? So if stock is increasing and you open purchases, you debit it. The other side is whether you purchase with cash or check or you purchase on credit. If you purchase with cash or check, then it means that an asset is going out of the business because you buy a building from, let's say you buy television from Melcom, so you purchase television from Melcom, your stock television will increase, okay, but you are also paying money to Melcom, so your cash will reduce. If you went into your bank account, your bank balance will reduce. So these two assets, cash or bank, if they are reducing, what do? We credit. However, if it was on credit, if you didn't pay, then you need to acknowledge Melcom as a creditor because you are owing Melcom. So you see that the purchases and the sales, they are opposite of each other, right? But that's the principle behind them. So I have some examples here, right? But I think based on the explanations I've given so far, you appreciate. So that is about the fourth transaction. Now, to get my professors to appreciate, let me open a new page and do some summaries there for them. So we see we have done 4 of the transactions, 6 more to go, right? And we'll finish very soon. It's not plenty, we'll finish very soon. Please, God willing, tomorrow prepare for a test in accounting, right? It's going to be online, so I'll share the link when it's time. You click the link. Within the stipulated time, you go and do it, because if you don't do it within the stipulated time, you may not have access to it again. Well, I think you did similar in economics, so some of you have experience. After answering and submitting, you see your score, maybe 20 over 100 or 20 over 20. You take a screenshot and put it on your private page. Okay, so take note of that. And make sure to read any instructions attached before you start. Okay, so we have seen 4 transactions. The first one is investment, okay, by the owner, or when the owner introduces resources or capital, right? Okay, so we are saying here the 2 accounts you open are capital and what? The assets. Okay, you normally credit the capital, okay, and then you debit the assets. But it depends. The asset could be cash, it could be bank, or it could be a vehicle. Okay. Now the second transaction we saw is when the business buys an asset. Okay. So there too we are saying the first account is the asset account. So if you are buying an asset, what asset did you buy? Is it a building? Is it a land? Okay. And normally we debit that asset. Okay. And then the corresponding entry could be an asset, which is cash or bank. Okay. You credit. That's when you paid, you bought the assets and you paid cash or bank. But if it's on credit, so let me do this, or if it's on credit, then it means a liability comes in. Okay. So as for this one, there is settled. You always open the asset and debit. Okay. But this depends on whether you paid cash or check or you didn't pay. If you didn't pay, then a liability comes in and you have to credit the liability, right? Okay. Then we have just looked at the third one, which is the sale of goods. So that one too, we say anytime you sell goods, the first thing you look at is your sales account, right? And sales is an income. So sales, you credit your sales, and then you debit the asset, cash or bank, if you received cash or check. Or if you didn't receive money, that's on credit, then you have another asset, which is a debtor. And that one too, you debit the debtor. So you see, for the sales of goods too, the first account is settled. The sales is settled. The other one depends on whether you sold for cash or check, or the debtor didn't pay. So I think now the summaries will make sense to you better. Okay. Then the fourth one is the purchase of goods. So for purchase of goods, the non-negotiable account you open will be your purchases, and you debit the purchases account. Okay. The other one depends on the assets, which is cash or bank. You credit it, or if it is on credit, then this time you have a liability. That's the creditor. You credit. So the first one under purchases is also settled. That's why I bold it and underline. So anytime you purchase goods, you open your purchase account and debit. But the credit depends on whether there was cash or check, or you didn't pay. That's the creditor. So take note of that. Please, I hope now we are clear. Any questions? Any questions? Mumbisa me questions. So now I say, me kasa sa na mon kasa me feel say my professors don't understand. Kasa kakre, and then I boring. Professors, let me hear some comment. If we are good, let's all unmute and say we are good, oh. Say we are good.
Say we are good, oh.
Very are good.
Okay, if you are good, then let me test your goodness and see. So I have transaction 1. Sold goods to Araba, $500 on credits. Sold goods to Araba, 500 on credit. So what I expect you to do is to give me the 2 accounts, who you debit and who you credit. And I think we are good to go. So if we are good, who is answering it? If you know, put up your hand, or if you want to contribute, put up your hand. So, okay, so Nicole is up. I want more hands. Oh, you now, you said you are good. Oh, and I'm more that. I don't know if you people came to meet that song. Deba, huh? Oh, dada me. Are you people dadaing me? Please, that's a bad English. So don't copy. Oh, is it only Nicole? Sold goods to Araba, $500 on credit. Oh, Professor Mama Miraho, Mitia Meno Mkrayela. Then it means I've spoken into the L, Makase Gumfamem, and Amashada. Now two hands. Oh, 2 out of 17. Oh, the 15, please. Don't do that. I'm even getting sad. Now 3. 14 more. And come on, me who bear 10 hands, no me who say yes. Vibes no, but 3, yeah, 3 is not encouraging. Is it that you are not sure of your answer? Anyway, let me pick Janet. Let me give Janet the first opportunity. Oh, Prof. Janet.
Yes, sir.
Okay.
So we sold the goods to on credit, Harbour on credit. So we open the sales account. Then the sales we will credit it.
Okay.
We will credit the account. Since we sold.
Oh, I think her network, she went. Oh.
She'll become a debtor.
Okay. So take that part again. Who becomes a debtor?
Ama.
Araba you meant, right? Araba.
Araba, yes, sorry. Araba will become a debtor.
Okay. So what do? We debit Araba's account, eh?
Yes, please.
Okay. In fact, when you get the first side, the other side, you don't need to think deep about it, because if you have credited your sales, definitely the other one will be the debit, right? So debtor. So the 2 main accounts you prepare is sales account and who? Araba. Okay, but you can label Araba a debtor for easy identification. Okay. Do you all agree, or some of you disagree? Okay, then it means we all agree. Now let me put in another one. Please, this one I want to see more hands. Those who confirm that what they had written is correct. Now you have confirmed. Another one. Sold goods. The same sold now. Sold goods to the same Araba now. The same amount, $500. Okay, so this is a transaction. Sold goods to Araba and received cash of 500. Professors, this one to what is going to happen? Prof. Joel Mensah, what is your thinking on this?
Sir, please can you go and come back?
Oh, I've gone. No, I went to Canada. I just came back yesterday. Okay, well noted. I appreciate your response. That is encouraging for me. Obi anko nkasa koraa. So I love your response. So I'll go and come back and don't worry. Prof. Jaden Abraham. Okay, Fidel is up for that. Jaden. Okay, Fidel, let's.
Sir, please can you hear me?
Yes, we can hear you. Go ahead.
Service, I think this one you also open a sales account.
So sales account.
And I think you don't want to credit it.
Okay, you credit. And I cut a debit.
Then this one, open cash account.
You open cash account and you do what you debit, right?
Yes,
Do you agree?
Yes, please.
Jorish, do you agree? Thank you, Fidel. Do you agree, Jorish?
Yes, sir.
Okay. So why didn't we open Araba? Why didn't we open Araba account? Yeah, Nicole.
So please, we only open Arabic accounts if she was a debtor. But in this
Exactly.
case,
Exactly.
she
Oh, I like that. Thank you. So you see, when you are dealing with transactions and you have the names of the customers involved, the customers become relevant only when they do not settle the account. So where you receive your money, that's all. It's now between sales and what? The money you received and not the person. So we only acknowledge the debtors, or we only acknowledge the customers when they become debtors. That is why in this transaction, Araba was nowhere considered in our books. So it's our sales and our cash. So the point I'm building is that anytime you sell goods, you see that for the sales account, it is conk. If I'm using bad language, but pardon me, it is conk. It is sure. Sales account, you credit it. It is the debit that depends on whether you sold it on credit or you sold and received cash or check. So I think now that I'm giving the examples, you are beginning to appreciate. Okay. Any question? Any question before I give in or put up the next transaction? Okay. So let me go another transaction. Transaction number 3. Bought a land from Nana JC Enterprise for $1,000 cash. Bought a land from Nana JC Enterprise for $1,000 cash. You see, now I've shifted from sales. I'm going to asset, right? Bought a land. Okay, Fidel, you want to go ahead? Go ahead. Let's hear you.
Service, it was the old hands.
Okay, the old hands. Okay. So who is going to attempt this one for us? Bought a land from Nana JC, Prof. Emmanuel. In fact, some people they don't like speaking of Prof. Dennis Leif Hayfon. Dennis, I as an answer, so back as some matter voice. I don't know, yes. So yes, happened tuberculosis. Prof. Dennis, you just say hello. I just want to hear your voice. Okay.
Hello.
Yeah, so Dennis, you know what you are doing to me. Is it good? Eh? Okay, great. But you see, I always encourage my professors to contribute in class because in a way it helps you to build knowledge, right? Because Okakwana said presumably it's wrong. Then you know the right thing and replace it in your brain. Okay, so don't feel shy in my class. So talk. For me, there's nothing like wrong answer. It's just that it's not in the markings. Okay. Yeah, Prof. Okay, Jorish. I think Jorish will start this one, and then Nicole, please. Nicole, drink water for me. So Jorish, let's say.
Thirdly, you open a cash account
Mm-hmm.
and you credit it,
Okay.
and you open purchase account and you debit it with an asset of land.
Please take that one again. Mm-hmm.
Thirdly, you open purchase account,
Mm-hmm.
then you debit it with the asset of land.
Then you debit it with the
Asset of land.
asset of land. Prof. Joris, you are doing a mixture of Shaolin soccer and a. Okay, so debit. I want to write it as he stated it. Debit with asset of land. Okay, great. Prof. Nicole, you have something different?
I think it's the same thing.
The same. Who has a different view? Prof. Emmanuel Nati, you have a different view? Ewenam, Stacy, Michael, Josiah, Joshua Boating. You people don't want to talk.
Say,
Yeah. Aweku.
so like in place of the purchases place, can you put Nana JC Enterprise there?
Okay, so Agbeko is also saying we should put Nana JC instead of the grades. Now Stacy wants to talk. So let me put Agbeko, Nana JC. I am enjoying the class. So yes, Prof. Stacy, let's hear you. So let's hear what Stacy has to say.
And please, instead of the purchases, can you use like open a land account, then you debit? You open a land account and debit.
So Stacy is proposing a land account and debit as opposed to Agbeko Nana JC debit and is it Joris? Yes, purchases debit. Any other? Fidel.
Say please, you credit the cash account, then debit you debit the purchases account into brackets land.
So, wow, I have serious accountants in my class. So Fidel more or less is going with Joris, right? You debit purchases. Okay, so let me comment. So you all had the first one correct, cash, right? Because we bought a land for cash. Now in accounting, when you hear for cash, it simply means look at the context of the transaction. What are you doing? You are buying a land, so it means you are paying cash. So of course, you credit the cash because cash is decreasing. When an asset, cash is decreasing with credit. But the other side, bought a land. Those who went for purchases, it cannot be purchases because here there was no mention of bought goods. Again, there was no statement to tell us that the business is into buying and selling of what? Land. I don't know if some of you know this Nana GC enterprise and probably think it's in the estate business. That's why you made those assumptions. But if the question has not given you any information to suggest that the business is an estate business or deals in buying and selling of land, then please, you cannot use the purchases. I'm sure that is the thinking that led you to choosing the purchases. Okay. So where you see, because naturally land is an asset, unless you are given information that the land is what the business buys and sells, then now it becomes what? Purchases. Okay. It cannot be Nana JC because what business do we have with Nana JC? We bought a land from him. We paid him cash, so we don't owe him. If we owed him, then he would have been relevant, right? So the best option is what Prof. Stacy gave us, that you debit your land account. Okay, so here the business is buying an asset, land, okay, using cash. So we debit land because land asset is coming in, land we debit, then we credit the cash. Okay, so those who went for the purchases, I won't fault you that much because you made the analysis that probably the business deals in buying and selling of what? Land. But always wait to see a statement that directly tells you that the business is into buying and selling of the particular item you are looking at. Okay, so I hope it's settled, right?
Yes, please.
Thank you. So thank you, professors. I think so far I appreciate. I can understand you are not getting the concept yet. The more reason why you need to come out of your shell, ask questions, okay, so that I can explain further, give more examples for you to understand. One kasa over confused. Yeah, Prof. Janet, you have something to say?
Pardon?
Okay, I thought you wanted to ask a question or something.
No, please.
Okay. So you see, I'm gradual. I don't want to rush you through the transaction. So I'm gradually building them one by one. So now we've done 4. We have 6 more to go. So let's see if we can do the next one. Then maybe we'll wrap up for the class. It's 12:55. The next one is acquisition of a loan. When the business goes to take a loan from a bank, right? That one I think is very simple. If a business goes to acquire a loan, okay, from a bank, look at it. We go to GCB, we go for a loan. The loan will come in the form of money, which can be cash, or sometimes they'll give you check. So if it's check, then we refer to bank, right? So the loan comes in the form of cash or check, which is bank. Right? But we also need to acknowledge that it's a loan, it's a liability because we now owe GCB. So anytime a business acquires loan, the 2 main accounts or the 2 elements are the loan liability and then the asset, which is the cash or the bank. I'm taking it again. If a business goes to a bank, for example, GCB, to take a loan, the loan will come in the form of money, which is cash. Sometimes they give you cash or they'll give you a check. If it's a check, you go to the bank, right? But it's still money. So recognizing that money, you also have to remember that you are owing GCB. And if you are owing, it becomes a liability. So we have the liability loan, the GCB loan, and then we have the asset cash or bank. So these are the twofold effects we are talking about. So what account are you going to prepare? You are going to open cash account if the loan came in the form of cash, or you open bank account if it was check. The second account will be what? The loan account, the loan. But sometimes you can label the loan with the name of the bank or the person who gave you the loan. So if it is GCB, you can add loan account, GCB, right? GCB, just for identification. But the main account is the loan account. In terms of debit and credit, the cash or bank will be increasing, right? Because you are getting money. So you debit it and then you credit what? The loan. Why? Because a liability has been created. A liability is increasing. Okay. So that is, you see, that one is very simple. So we have an example here. Took a loan of 4,000 cash from ADB Limited on 18 January. So we open the account cash because the loan came in the form of cash. So an asset cash will increase with debit, and then we open the loan account for ADB. So loan ADB account. We credit that one. Very simple. So when the business goes for loans, you don't really struggle that much. I think that is clear. Any question? Okay. So today's lesson has been about trying to appreciate, most importantly, the sales of goods and the purchase of goods. However, I think I did revision on when the owner makes investment and when the business buys an asset or acquires an asset. I just finished with when the business goes for a loan or acquires a loan. So I want to believe my professors are very okay. I'll try and give you some transactions on these areas we have discussed and see how well you can do it. So let me put things in perspective for you. For the sake of examination, normally when they give you the transaction, they can ask you to do two things. The first one is to ask you to tell us the effect, okay, the effect of the transaction on the element of accounting equation or the element of account. So when you see effect, it means they want you to tell us whether an asset is increasing. So let's say increase in asset and maybe increase in another asset, right? That's what they want you to do. But if the question says record in the ledger account, record, then they want you to now open the account, okay, as in do this. You open the T, so you open the T account like this, okay, and based on your analysis, you debit or credit in that order with the date, the details and amount, and I think all of us have done that before, right? So we are very comfortable. Yes, Prof. Nico, I think you have a question. Let me get
Sir, please, can you go back to 5A?
Can I go back to
5A, acquisition of loan.
okay, 5A, acquisition of. Are you copying? If it's about copying, I think the document is on the page.
No, it's not about copying.
You want to pick some details. Okay, so this one, right? 5A took a loan of 4,000 cash from AD.
Yes.
Okay, so I'm here. Yeah.
Yes. So, why is the loan decreasing?
The loan is increasing. Okay, I think increase and liability loan. Oh, sorry, increase. That's a typo error. A typo error. So sorry about that. Well, that is a good sense of monitoring or checking. So asset cash or bank increases and liability loan increases. Okay. Because if you see from here, it says when you go for a loan, a debt or a liability, right? Therefore, liability also increases. But in the example, I think I made a typo mistake there. So thank you for that. Okay, so I think that is settled there. Okay. So the liability would increase as is seen here. right? Okay. So I was just putting things in perspective so that you know what to do at any point you are asked a particular question. So when they say record, it means they want you to open the T account. But if they say show the effect, then you are only going to look at increase in asset, increase in. But if the name of the specific asset is given, then you put the name in a bracket. So increase in asset, for example, cash, like that. Okay. And then maybe increase in another asset, maybe you when the name is given specifically, give it there. If it's a name of a debtor or something, you put the name Kwame there in that order. Okay. So I'm going to give you a few transactions for you to try. I'll see if I can do both the effects and record. But on a second thought, tomorrow we have a class test, so maybe I'll not bother you that much. But let's agree, if you want us to do it, why not? I can put those transactions. Plenty fish does not spoil soup, right? So you can tackle this one, and then tomorrow too, we deal with the exercise. I'm actually thinking about giving you 100 multiple choice questions for 1 hour. No, 1 hour will be maybe for 1 hour, 30 minutes. 100 or 50. 50. Let's discuss. I'm a friendly teacher. But multiple choice here means you can have selecting from 4 options, A, B, C, D, or you can have a feeling and then true or false as well. So it's a mixture. Okay. So what do you suggest? 100 or 50?
50.
Oh, 50. So the I say
50.
50.
50 for 45 minutes.
50 for 45 minutes.
50
Yeah.
is okay.
50 is okay. Okay, if I do 50, then it means I'll put some written or practical one where you have to probably prepare some account on the pay. That one can marking that one.
No, then 75.
Then 100.
Then yes, then 100 or 75.
Professors are running away. We are negotiating, you are running away. Anyway, I'll decide that and then give you feedback on the page. But tomorrow's class time will be used for the class test. So even those in the BM class, it will be same. You do the class test for BM. And I'm also looking at giving them either 50 or 100 questions. Okay. But what is important is pay attention to the instructions, especially for the feeling. Okay, I have set the answers that you have to type in capital letters. If you type small letters, the system may automatically mark you wrong, even though the thing is correct. So I've put all those details there. Take notice of them before you answer them. So I'll share the link as and when message. So today I think we have at least gotten few. If for nothing, you know that anytime you sell goods, you open the sales account and credit it. And anytime you purchase goods, you open the purchase account and you debit it. The other account depends on whether cash or bank was involved or it was on credit. And I think this simple summary makes a lot of sense to you. So thank you very much, professors. But feel free to reach out to me. If some of you are still not okay with what we have discussed, please, whether privately or on the page, put it there. On weekends, I have some free time on my hands. We can do some 20 minutes, 10 minutes explanation just for you to get it. Okay. I don't want you to be on Omega accounting. You go to school, they ask you to record a transaction, and then you are scratching your head. In fact, wherever I am, I'll be sneezing because something is happening to my professor. Okay, so you have the avenue. Please make use of it. I want to thank you very much. Gabriel, sorry for putting you in there, but the other person is Xiomi. I don't know who it is, but if you know the person, just send my apologies to him or her and tell him, please, next time you should just make the work easier for me. On that basis, I wish you all the best. Enjoy the rest of your day. I hope to see you next time. This time you'll be talking and asking questions plenty. Okay, so it's a wrap for me.